not Friday of this week, but Monday of the next week. We will be off for Memorial Day. And we often see very thin volume as we get towards the end of this week. So be careful either direction. Could see a big rally this week. Could see a big sell-off this week. Could see a big sideways move. Let's talk about all the scenarios. Let's start off looking at the intraday chart of what happened on Friday. On Friday, we opened for monthly OPX and waited on our settlement print from ticker set. Once we got that, you can see we just dumped right out of that range and started selling off, breaking down below our 20 line, and we couldn't get back above that 20 line, and from there we just melted down over the course of the day until we hit our low for the day. Ended up being around 1:30, 1:35 in the afternoon Eastern time, 38.10.32. At this point, we were dipping our toe below the 20% off mark for the year, and we were also just over 1,000 points off of the all-time high and the high for the year at 48.18. From there, we bounced, retook our 20 line, back tested it and failed a couple times, but this final leg of the rally into the close took us up 90 points off of the low of the day to close at 39.01 and change. That was a higher close over Thursday at 3,900, so a higher daily close and also a higher closing low for the year. I do not like this. I do not like this one bit. This is an even bigger cavern now between where our closing low is at 3,900 and our intraday low at 38.10. This is not sustainable in my opinion. This could be, the start of a huge short squeeze for this week, but I do believe after that all settles out that we will come back here and try to backtest 38.10 and close closer to it at some point in time. Okay, for now though, Friday was the 7th lower weekly close in a row. Probably looking at some kind of a tradable bounce next week if we can get through a couple of important levels. Starting with, we got to get through 39.46. This is where our highs kind of looked below and failed on both Thursday and Friday. And our 10-day is going to be sinking down close to here as well on Monday. So let's take a look at that on the roadmap. You can see the 10-day simple moving average probably moving all the way down here in bed with Thursday and Friday's highs. And I just kind of rounded those up to 39.46. That leads us to 39.50 in our 80 handle rule level. And also the halfway back of last week's range that we just traded. Significant in that it's got our 2022 low in there. So 39.51, the highs from the last 2 days, and the 10-day simple moving average all ganging up together here around this area between 39.46 and 39.51. If you want to wait for this breakout to happen, if you want to wait for us to print and hold above it, or if we gap up open above this and fall back to it and back test and hold it, that's your spot to get long for a rally that's going to last a few days, in my opinion. If we come out of the gate weak on Monday, we're looking for maybe an inside day that holds us in the upper half of Friday's range. Remember that old recipe for strength? If we have an inside day, a consolidation, and a digestion day on Monday that sits between Monday's high and the halfway back of the Thursday-Friday range, around 38.78, we can kind of pin that to our 38.80 level, our 80 handle roll kicks into gear there. If we can hold 38.80 to 38.78, I would be buying some calls for turnaround Tuesday. If we break down though below 38.78, we're going to get into the lower half of Friday's range, and maybe we will take care of this business on Monday of getting back down here, back testing 38.10 and closing closer to us, closing closer to it, and getting everybody really bared up and really short and ready for that move to 3,500 on Tuesday, only to have turnaround Tuesday come in and have us rally. That's what I think would end up happening if we wound up down here on Monday instead. I would be buying calls down here, or I'd be buying calls on this hold of the halfway back, or I'd be buying calls up here on a hold of the halfway back of the whole week we just traded. Our goals to the upside eventually, if we do get a rally going that sticks, the 20-day simple moving average, above the 20-day simple moving average, this gap at 41.23, maybe 41.23 to 41.25, maybe we would consolidate and hold here. Maybe that would be it for the week. If we got up here early, held and consolidated, maybe the data on Thursday and Friday is better than expected. Maybe we get some kind of a crazy rally to end the week all the way up here taking a shot at the 50-day. If this were to happen, though, if we got all the way up here next week, all the way up here looking below 4,300, I would be buying some puts for when we return from the holiday, because then I think if we get all the way up here without resolving this 90-point Grand Canyon down here between where our closing low and our intraday low is, if we get all the way up here without taking care of this, I think that this could be the short that makes your whole year. Buy whatever puts you can afford for the move back down here as we get back from the holiday and as we get into the month of June. Also, what's happening in the month of June is the ES contract expiration, and we often see crazy swings in price up and then slam back down, or slam down and swing back up. So if we don't take care of this business now as we go into Memorial Day, I think maybe we'll be taking care of it in early June as we get into those wild swings that we see into ES contract expiration. And then finally, let's take a look at this one more time. We've gone over this many videos in a row, so for those of you who know this already, you can just cut me off here. But in order to get to 3,500, this is the motivation to get here. A lot of talking heads talking about this. But what we've seen so far is strong support intraday at the 3,800 handle and closing at our 3,900 handle. All right, if we break down below 3,800, we have a speed bump at the 2021 low at 3,662. At 3,590, as we dip our toe into the 3,500 handle, we would be minus 25% off for the year. And if we got all the way down to close to 3,500, we would be at the halfway back point between our 2022 high and our COVID low in 2020. That's 3,505. Our bear fork that seems to be working pretty well for us so far, with our last rally taking a look above the outer side of the bear fork and failing. If we got all the way down here to the bottom of the fork, on May 26th, the week that we are about to trade, the bottom of this fork passes through this 3,500 level. So if we don't get down here soon, we would have to pull down below 3,500 to actually get to the bottom of this fork. And so I don't know that we ever really would see a touchdown all the way to the bottom of it. But we certainly would have a tradable area from the median line towards the bottom of this fork to sort of lead the way getting down here to that halfway back point. Now, this is kind of interesting too. I went over this in last week's video, but if we were to just sort of walk down this median line over the course of the next few months, we would get down here to 3,505 using our median line of our fork in July. So that could be the way that sets up the road to 3,500. But in order to get there, we got to get down below 3,800, and so far that has held multiple lows for us in the year 2022. All right, that's it. Have a great rest of your Sunday. I hope this video helps you out. As always, good luck and good trading.